Welcome to the Money Pig Podcast, brought to you by Goodwin Investment Advisory, where our mission is to lead people to financial peace, independence, and generosity. I'm your host, Reed Trigo. If you're enjoying the show, please rate and review our show wherever you get your podcasts. If you have a question you want us to address, you can email us at moneypig@goodwininvestment.com. And today on the show, we are joined by wealth advisor, certified financial planner here at GIA, Goodwin Investment Advisory, Justin Pitcock, for a discussion about how to get paid as a small business owner to start a retirement plan for your employees. Thanks for being here, Justin.
Thanks for having me again.
Yes, always good to have the smartest guy in the room. So this is how I improve myself. It's pretty close. All right. So how to get paid as a small business owner to start a retirement plan for your employees. That sounds too good to be true, but let's unpack the idea because we got some stuff to talk about here. First of all, let's just start with why should a small business start a retirement plan? And little background on that. I owned small businesses, and small businesses can run on pretty tight margins, right? Oh, yeah. When we do the business, we look at what's left sometimes and we're like, whoo,
we did a lot of work for that.
Yeah, we don't calculate your hourly rate, at some point. But once a business is up and going and it's successful and it's producing good income, then there is a time you'd think, oh, what can I do to reward my employees? So why is it that a business would set up a retirement plan for its employees?
There's two main reasons. One is to attract and retain talent. In today's landscape, it's how can you offer more benefits to be more attractive to potential employees at a smaller cost than just upping their salary, right? So one way to kind of have a mutual benefit there. Mm-hmm. And you got to be competitive. There's, all the big employers out there are offering 401k plans. They're offering matching contributions. They've got the health insurance, all the other things. And from our experience working with small business owners, one of the lowest cost things that you can do for your employees is start a retirement plan. And so, on that end, but selfishly, as a business owner, it would be a fantastic account type for the business owner to save money on taxes and save for their own retirement. So it's twofold: selfishly for yourself, sure, and then for your employees. And it helps you become more competitive. You can add vesting schedules in the 401k so that, hey, like they want to stick around because all those matching contributions you are providing, they've got to be there for a period of time to actually get to keep them.
Awesome. And we talk about this, but like small business owners, they're doing whatever it is they do. They own a salon, a barber shop, or whatever kind of small business, travel agency, something like that. They're doing what they're doing. And they have these employees, and they want to, most people want to be able to set especially young employees, on a good path.
Right.
And on a good path with good habits, money habits, especially in this case. That's what we talk about a lot. So this does help employees set up a plan for their future as well.
That's right. Generally, some people are wired to be good savers. They, probably have a savings account somewhere. But that's not the best way to save for retirement. And the odds are if you don't do it for them, they're not going to get set up on their own. And so it's a, for their retirement, for their future, it's a huge benefit that, it's an investment in them that, I think there's some reward more from just, the good feeling of doing the right thing for your employees.
I love it. All right. So what kind of retirement plans are we talking about here?
So 401ks, SEP IRAs, and simple plans. Now, we don't do simple plans here because they're not simple. And in our experience, they cause a lot of frustration for the business owner. So that's not what we're here for. We don't want our business owner clients to get frustrated. Well, so we stay in the 401k and SEP IRA account types.
Right. And these are because they're employer sponsored as opposed to IRAs and Roth IRAs and brokerage accounts.
Those are done individually. That's right.
That's right. Okay.
So really we'll talk about a traditional 401k, self-employed 401k, and the SEP IRA.
Okay. So kind of let's break down at least the 401k and the SEP IRA.
Well, let's start with the SEP.
Okay.
So really there's normally no startup cost to set up a SEP plan for your employees. That's the beauty of it. It's actually very simple. Each employee will have to set up their own account. That's kind of the one hurdle there. You have to get with everybody to do it. And it's an employer-only contribution. So the employee is not putting any money in the SEP themselves. It's the employer putting that money in there. And what you do for one person or yourself, you have to do for everybody else. And it can range anywhere from, starting out at, 0 or 1% all the way up to 25%. You can't do more than 25% of your employee's salary. Now, if you're a business owner and you're the only employee, you're actually stuck only doing about 20% unless you file as an S Corp and W-2 yourself.
Okay.
And then you can do 25%.
Of your W-2 income.
Of your W-2 income.
Okay.
That's right. Mm-hmm. So the SEP's a great option because it's simple. Don't get confused. It's not the simple IRA. The SEP is actually the simple one.
This is nothing like the IRS to make it complicated. Okay, good.
Your other option would be a traditional 401k, and you can set 401k plans up to offer Roth as well. So employees and yourself, you could put money into the 401k, but have it go to Roth. And then for business owners who are the only employee that don't have employees, you could do a self-employed 401k. And generally, there's no startup cost to set up a self-employed 401k at most providers. And the difference here is kind of the contribution formula. If you're a business owner and you're the only employee, you could do a SEP. You could do a self-employed 401k. There's no startup cost generally, but the formula to figure out how much money can go into those two different account types is different. You have a contribution limit that's with the 401k that's based on the normal 401k rules. An employee can put $22,500 in there unless they're 50 or wiser.
In a year.
50
or wiser.
Thank you.
That's hilarious. Okay.
Yeah. If you're 50, you get a catch-up contribution, and you
Yes.
could actually put in $30,000 in 2023 as the employee. Now, you're also the business or the business owner, so the business gets to put matching contributions in. And again, whatever you do for yourself, you've got to do for everybody else. If you're doing a self-employed 401k, you're the only employee, then you can do up to basically like a 20% contribution of the company's profits in addition to the $22,500 or $30,000 if you're 50 or wiser.
Okay.
And so we see a lot of clients who are due to their profit and their income, sometimes a self-employed 401k is better because they can put more money in. The SEP IRA, you can only put the 25% in if you W-2 yourself, or 20% if you don't. Now, if you have employees, you probably don't want to match everybody at 20% if
Right.
you're doing the SEP. So, maybe it's 3, 4, whatever. And then I'm bouncing around here, but hopefully you're tracking.
Yep.
The full-blown 401k, there are startup costs, but just like the self-employed 401k, you have kind of the different contribution formulas. You got the component as an employee, $22,500, and then you have the employer matching contributions. And with the full-blown 401k, there's some rules around what those matching contributions need to be in order for you, the business owner, to fully maximize and use that plan yourself. So we help our clients navigate that. I think that might be beyond the scope of this podcast, but just know we could help you with that. So these are the different account types. And with the passing of the Secure Act 2.0, this part of the law went into effect at the beginning of this year. Business owners can get paid to start one of these plans for their employees.
Business owners usually like the idea of hearing the words, you can get paid. So, and it, I got to say, it does sound too good to be true, but talk us through this. These were incentives created in this Secure Act 2.0 that started 2023, which was a beast of a bill, but had some really interesting things in there for retirement plans and deferred savings.
Yeah, the bill, I think, across the board was great for small business owners. It was great for savers. And so what we'll focus on today is just how this can relate to 401k plans or SEP IRAs and business owners. So the IRS now is providing a tax credit to incentivize more small businesses to offer retirement plans. They're almost making it so attractive that who would say no?
Is that right? Okay.
And so there's the law is broken into two segments. There's a startup credit and a contribution credit. And the startup credit is a credit that's available for the first 3 years. And it's kind of an either or component here where it's the lesser of what your startup costs are, or there's a formula that you get a credited amount based on the number of non-highly compensated employees.
Okay.
So there's a definition for that.
Yeah, the HCEs. Yep. That's a whole new podcast. Yep. But yes, exactly.
So it's the lesser of the two. So if you're doing a SEP IRA and there's no startup cost, well, that's a zero.
Right.
But there's still the contribution component of this formula that's where you could get paid to put money in your employees' accounts. Basically, just to kind of summarize, like what is an HCE? That's anybody that owns 5% or more of the company or makes $150,000 or more in 2023. And every year that number gets adjusted up for inflation. So that's the current threshold for 2023. So let's say you've got a small business, you've got 20 employees, and you do a 401k plan. Startup costs were, let's say, $2,000. Okay, you'll get a $2,000 credit to cover your startup cost, and there are actually some 401k plan administrators that are offering an additional tech credit, and they don't want to phrase it as like a rebate or anything like this, but they're basically paying you to get set up with your payroll provider, and we've seen tech credits of up to about $5,000. So here's how you get paid to start up a plan. Maybe the startup costs are $2,000. Well, the IRS is giving you a $2,000 credit, covers 100% of your cost up to $5,000 because you have got 20 or more employees or of non-HCE, non-highly compensated employees. Mm-hmm. And then you're getting paid by the 401k plan administrator who's making an investment in you to be a client, and they're paying you. We've seen up to $5,000
because they know that there's 20 employees who are going to be contributing. They're all going to participate.
That's right.
We're going to encourage them to do that, or however that's going to work. And how the tax credit work? Is that like the LLC is filing its corporate tax return, and on that line they say, "Wait, we spent $2,000," and automatically somebody goes, "Oh, well, there's $2,000 credit on that."
You'll need to talk to your CPA on that one, but I'm sure it's on. I mean, because you don't have to be a corporate entity. It could be an LLC, a partnership. So it's on the tax return, and you'll have to claim the credit.
People who know me would laugh so hard that I just actually asked that question. But taxes are my kryptonite, and here I am exiting tax. Never mind.
So the second part of this tax credit, the Secure Act 2.0 tax credit, is the contribution credit. And if you've got 50 or less employees that have wages under $100,000, then the first $1,000 of contributions that you put in your employee's account gets reimbursed for you. So think about it. Let's just say you have 50 employees that make less than $100,000, and that's $50,000. If you gave every employee $1,000, the IRS is paying you to do that. So dollar for dollar, if you put $1,000 in each employee's account, and those are the employees that made $100,000 or less, they're not going to pay you to do it for the folks that made more money than that. So to be clear, but you get paid to provide this great benefit to those employees. And those are probably the employees that need it the most.
That's right. Yeah. And you're thinking like under $100,000, that's still $45 an hour or $50 an hour. These are decently paid employees.
These are good jobs. Yeah.
These are good jobs.
And then there is a phase out on this part of the tax credit. If you have more than 50 employees, you gradually get phased out of this tax credit, up to the point where if you've got 100 employees, you're completely phased out. This law is really focusing on small employers, trying to really help them provide this awesome benefit to their employees at basically no cost. And the contribution credit is available for the first 5 years of starting a retirement plan. And the first 2 years, it's 100%. So if you put in $1,000 per employee, you get $1,000 back. The year 3, you get $750 back if you put $1,000 in. And then year 4, it's $500 if you did $1,000. Year 5, it's $250 credit back if you did $1,000. So it does phase out, but hopefully that's giving you as the business owner the opportunity to establish a plan, to build the business, to invest in your employees, and get started at no cost. And worst case scenario, you can always terminate a plan. If you hit hard times, you can skip a year. You don't have to make matching contributions, but you can right now, and you can get reimbursed for that. And there's even 401k plan administrators out there that will pay you to get started.
Yeah, see, that's interesting because, as I mentioned, I've been in the small business world, and you're like, well, you got to, if you're going to make matching contributions for your employees on a 401k, you got to factor that into their compensation. You got to be thinking about that as the total package of their compensation, including your portion of the employer's portion of their tax, their payroll taxes, and all this kind of stuff. So this does make it way more appealing than when I might have done this many years ago, which I was just being a nice guy. But,
It's really appealing if your business is in that sweet spot. The businesses that are going to get the most, the largest credit are those between 20 and 50 employees. But I mean, if you've got less than 20 employees, there's still a credit there for you. It's going to cover your cost. If you've got over 50, you still get the startup credit. You just are getting phased out of the contribution credit.
That's great. So, yeah, and I think the long-term goal, I love that they're doing this for small businesses because, we tend to hire starting out or, new employees, entry-level types of jobs, and we develop them as we can. And as we know, kind of financial astuteness or sophistication for our young people isn't always amazing. So if we can help them get on good financial footing, no matter what kind of business we own, and create good habits of just constant deductions from their payroll, that helps them down the road. And if we can then keep them from cashing it out to, buy a car, that's even better. So that's fantastic. So how do we here at GIA actually help small business owners set these up? Because I know you've done this a few times.
We work with a lot of small business owners, and we really want to understand your personal goals. In understanding what your personal goals are, we can navigate, do you need a full-blown 401k plan? Do you qualify for a self-employed 401k plan? Or let's just keep this really simple and do a SEP. And so we can navigate that. It's going to provide a great tax deferral for you as the business owner. And it's going to provide a great benefit for the employee. For full-blown 401k plans will help in a consultant role, work with a 401k plan administrator. And that's a third party that we can basically shop out for you. There's different vendors that we like. And so we'll explain the pros and cons of the different vendors and definitely tell you about the ones that are offering a tech credit.
Tech credit.
Yeah. So those are especially attractive to work with right now. But we'll work as a consultant to help get this set up for you. And then on an ongoing basis, we're there to help your employees when they have questions about how should they be invested, education on the investment options. Should they do pre-tax or Roth? What are, so we're there to provide education for everybody. When anytime an employee has questions, we're here to help manage the investment options that are available for your employees. And we like to keep that really simple so that even the employees that have no financial experience can be in something that they understand.
Yeah.
And so we're here to help with that on an ongoing basis.
Yeah, I love it. That's awesome. Well, thank you so much for being here.
Yeah,
that was awesome.
Thank you.
And as Justin was just saying, as financial advisors, we manage and balance portfolios, but the unique value that we offer is that we work to understand our clients' individual goals so we can have these types of planning conversations that are so personal and unique to each individual. So thanks again for joining us. And if you're enjoying the show, please leave us a rating and review. Follow our show wherever you get your podcasts. And remember, if you have a question you'd like us to address, you can submit that by emailing us at at goodwininvestment.com.
It is called MoneyPig.
MoneyPig. Thanks much. Have a great day. We'll see you next time.
The Money Pick podcast is hosted by Reed Trigo, a financial advisor at Goodwin Investment Advisory. This podcast is intended to share information and perspectives, but should not be interpreted as legal, financial, or tax advice. The opinions shared by participants are not necessarily endorsed by the company. Goodwin Investment Advisory is regulated by the SEC, and the company operates in compliance with applicable securities laws and regulations.